What's up, everyone? It's Scotty with Money Investing. So markets here absolutely crushing it on the day on the back of big tech, with the Nasdaq pushing up almost 2% on the day. We got the S&P 500 up over 1.3%, and the Dow Jones closing in past 34,000, also up close to 1% on the day. So hope you guys are doing great. A lot of stocks were absolutely killing it, pushing higher, especially the likes of Meta, Tesla, Google, Microsoft, Apple, Amazon, all of them absolutely pushing higher, taking the markets higher with them. However, we are now approaching a very, very critical area of resistance. So we are now inside the bear camp for both the Nasdaq and the S&P, and how we trade at these levels is going to be extremely important for the next leg up, which is going to be the next resistance for both the S&P and Nasdaq, which I'll also break down in this video. The PPI numbers came out, bank earnings are coming in tomorrow, so I got lots to unpack. Hope you guys are enjoying this video and find it helpful. If you do, make sure that you drop a like and don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below. There is a 16% annual discount available till the end of this month, and you can access all the alerts, all the member benefits, including private videos. I've shared 3 private videos for this month, including the wheel strategy, the trade ideas, and also the tutorial on options, which will really help you get started if you are literally just getting started with options. It's going to be a very, very beginner friendly tutorial that you can access as well. So this right here is going to be a quick summary of the market. So tech stocks, which were among the hardest hit during the periods of rising inflation and rates, leaped Thursday. Both in the communication services and IT sectors were among the notable gainers in the S&P 500. So once again, we're seeing a little bit of money rotating into these names. And again, a little bit of concentration with mega cap tech stocks advancing. Amazon up over 4.7%. Shares of Google up, Alphabet pushing higher, Meta up 2.7%, Tesla rose a little bit over 3%. And that's all great because my portfolio makes up majority of the names mentioned here. I would say 40 to 50% of the portfolio is in companies like Tesla, Meta, Amazon, and Google. So that is completely fine. By the way, I shared on my Instagram how much I'm up year to date in my growth portfolio. So if you want to check that out, link's going to be down below for my Instagram. Feel free to follow me. Feel free to connect with me there. If you have any questions, you can also reach out to me over there. And I don't post very often, but sometimes I do. And I did post yesterday a story going over the growth portfolio, the dividend portfolio, how much I'm up on a year-to-day basis, percentage, and dollar terms as well. So the market was a little poised to potentially go up on any positive news. And in this case, the PPI numbers was quite a bit better than expected. This was Spouting Rock Asset Management, Reese Williams, and I think that gives people some comfort in the fact that Fed probably doesn't have to raise rates in the next meeting. But right now, the Fed Funds Futures still anticipating a meeting or still anticipating a rate hike in the next meeting in May. Now, Wednesday marked a 2-day losing streak for the S&P 500 as the minutes from the March meeting pretty much mentioned that there is going to be a mild recession later this year, and markets might be getting a little too ahead of themselves as far as optimistic that the Fed will be able to cut when the markets are pricing that in. And I don't think the Fed is going to be able to do that. I think the Fed is going to have to stay on hold for longer than people anticipate, and then maybe rate cuts next year. But I think they're going to have to stay on hold because we're still in a very sticky inflation environment. Now, speaking of inflation, PPI numbers came in absolutely incredible numbers. We did drop pretty dramatically here on a year-over-year basis. But once again, we go back to that research paper on inflation that pretty much suggested that first half of the year, since we're comping over some very difficult numbers from last year, it can really seem like inflation's coming down. But what's really going to matter is towards the back half of this year, can we actually sustain these price decreases, and can inflation actually indeed come back down under control? Because it's only happened twice in the last 50-something years between 24 different case studies. It's only happened twice, and I think it was Japan and Australia. Could be wrong, I have to go back and check. Only 2 instances where inflation passed that threshold of over 8% and was back down under 2% within 2 years. But most of the times it took anywhere between 7 and 22 years with a median of about 13 years. So yes, inflation can be sticky and it can be stubborn once it gets out of the bottle. But again, the second half of the year is what's really going to dictate where inflation, of course, interest rates end up going. So on the day, Tesla 3%, Amazon 4.6%, Disney, Netflix, Meta, Google, Microsoft, Apple, so big tech absolutely crushing it on the day, with PayPal also pushing higher, 2.75%. So there was greenery almost everywhere, with semis, more specifically Nvidia and AMD, struggling a little bit here on the day and not really moving higher, but instead slightly flat to down on the day. So this right here, entire market doing really well, and pretty much all sectors in the S&P 500, all 11 sectors are green on the week, they're green on the month, and we are absolutely cruising it right now, moving to the upside. Lumber prices, coffee prices, cocoa, platinum, all pushing higher. Lean Nogs here also down a little bit over 2.3%, and Ethereum passed 2100 on the upgrade, and Bitcoin also passed $30,000 here. And as a result, a lot of crypto-related stocks, Mara, Riot, they were up double digits, up like 15 to 20% on the day. Now, Warren Buffett tells why he sold most of his bank stocks. Now, this actually came out very recently, and he's been moving a little bit more into Japan and some of the trading houses in Japan as well, which I will be doing a separate video on very soon. But Warren Buffett sold most of his bank stocks except for one, Bank of America. So they're not reporting tomorrow. Tomorrow we've got JP Morgan, Citi, Wells Fargo, and BlackRock. Bank of America is reporting on the 18th, which is going to be next week. But it's going to be quite interesting what type of guidance, what type of deposit base, what type of earnings these banks report. And tomorrow is all going to be about earnings, because that's really what's going to drive the market. So on the day, very, very strong gains. We got QQQs pushing up 1.96%. We got the Dow Jones up a little bit over 1.14, back over 34,000. And we got the S&P pushing up 1.3%, back over 4,100. And the NASDAQ also back over 12,100, pushing up to 12,166. Now we are approaching a very critical area of resistance. I know that every time the markets are higher, the bulls like to come in. Every time the markets are lower, the bears like to come in. And the comment section is always this polarizing debate between markets going higher or lower. But instead, what I would encourage you guys to look at is simply the data and the price action itself. We are entering a bear camp, which is a resistance where we have previously gotten rejected at not once, not twice, but 3 times. The data is literally in front of you, right? This is the chart that I want you to focus on, where we have literally, again, I'm not making these things up, we have gone up to this level at 4,200, gotten rejected, and the S&P 500 has sold off 9%. Same exact thing happened over here. We were at 4173 and the market sold off 12%. This right here was a breakout, but then we got up to that next resistance at 4,300 and the markets sold right back down at 15 to 20%. This right here was another time at 4,100 when the S&P 500 back in December got up to that level and then sold off about 7.7, close to 8%. If we break out, great. That's excellent. I am mostly long, net long on a lot of big tech stocks, and I would absolutely love it if the markets could break out past this level, but it is literally looking at the pattern, the chart objectively, and mentioning that we are once again inside this red rectangle where we have previously gotten rejected, not once, not twice, 3 times, in fact even 4 times if you consider this right here a little bit of a blip back higher, and we got up to as much as 41.14 or something, and then dropped another 7 to 8%. So 4 times we've gotten rejected. Can this time be any different? Yes, eventually we will break above this level, but is this time going to be it? That's the real question. That's what I want you to answer down in the comment section below. If you believe we're going to see a breakout past 4,200, or if you believe that we're going to see a little bit of rejection. And if you can also provide some thesis, some actual explanation, analysis as to why you believe we're going to or we're not going to break past this level. But right now as it stands, RSI definitely getting a little bit on the overbought side. So is the MACD. A lot of individual stocks we've already covered on the channel. And of course, big tech is definitely getting ahead a little bit ahead of themselves considering the technicals, and of course not to mention the valuations. So it is going to be challenging. Is it possible? Yes, but it is going to be a little bit difficult for the S&P 500 to find that volume, right? Find that liquidity to break past this level of 4,200. Very, very critical area of resistance and a big testing point for the market. So that's what I'm really watching. And that's going to be the bear camp, resistance sitting at 4,200. That's the level. And same thing is true for the NASDAQ. Same exact thing, right? NASDAQ coming up to that level as well. 12,280 to 12,300 is really where the bear camp is going to be for the market. And again, just simply look at the data. Simply look at the chart itself, and you can see that we are, and again, right, the thing is that everyone wants to be bullish. Like if you go back to this right here, if I just simply remove over here, like remove the charts from where we are right now, on the way up, right, everybody's like, hey, we're just going back to all-time highs. We're just like back to where we were, in 2021. And this is all happening on the way up, right? We're approaching that resistance. If you fast forward a few more candles, so there we go. We're approaching 12,280. Right, and that right there was a day of 3.25% for the Nasdaq. Right, very, very smart, very, very significant move to the upside. And of course, we're getting up to that level. But what happens after is we see a little bit of a down day, green candle, but a bit of a down day, and then again a little bit of a pullback. Right, then we push back higher. We're going up there for another retest. Right, we're going up there, and boom, another red candle down 1.6%, another red candle down 1%, down. And then up a little bit, back up to that retest, getting up there, and boom, once again, a little bit of rejection, selling right back down, pulling back, red. And then over the course of this next few candles, you can see that we are starting to come right back down. So that's the idea, right? I'm not saying that we're absolutely getting rejected here, but just the idea that we could is something to keep in mind. Okay, that's a bear cam, and 12,280 to 12,300 is going to be that level to watch. And let me know in the comment section down below if you believe that we are going to see a breakout past this level. And if we do, the next level is going to be at 13,200. That's the next resistance from back in August of 2022. So those are really the 4 levels to pay attention to on the S&P 4,200, the Nasdaq 12,300, and if you break past those 2 levels, S&P 4,300 and the Nasdaq 13,200. Those are the 4 levels to pay attention to between the S&P and the Nasdaq. Going over to Apple now. Apple here, very strong move to the upside, up over 3.4%. Once again, buyers stepping right back in. Volume was decent, and support level is going to stay put at 157. We didn't quite come down to retest that level, but instead pushed right back up. And this is still the downtrending channel. Very, very small, modest lower highs and lower lows. Resistance is going to stay put up to 177 for Apple moving forward. So that's going to be that level to watch. Support level is going to stay put at 157 for Apple. And again, like I said, resistance is going to stay put at 177. I did a video on Apple earlier today talking about the valuation and really what that long-term trajectory looks like for Apple moving forward. Talking about Amazon. Amazon with a very strong day, pushing up over 4.6%. Lots of buyers stepping in back over $102. So this is a big resistance area to watch for Amazon. So we have gotten rejected here, not once, not twice, but several times in the past. And of course, beyond this, we're going to be paying attention to 114, 115 levels for Amazon as well. So lots of consolidation sideways. Resistance is going to stay put roughly at 104, all the way up to 114 for Amazon. Tesla, another big winner on the day, up almost 3%. And what we are really witnessing is a lot of consolidation sideways. So you can see that we are also somewhat forming a symmetrical triangle where this right here is going to be that lower highs. This is going to be that higher lows. So we're constantly trading in between that range. Eventually, there is going to be a much bigger move that's going to happen for Tesla. As you can see that we're kind of making a narrow symmetrical triangle where we are potentially moving into that wedge. And eventually, we are going to see a much bigger directional move for Tesla. That could happen on earnings next week. So April 19th is when they are reporting their numbers. But for now, support level is going to stay put 175. Resistance pretty strongly at 218 to as much as 225 for Tesla. Talking about PayPal. And PayPal here finally getting some momentum, pushing up 2.75%, but we're still very much consolidating sideways. So you can see the support level roughly at around $70, $71, resistance roughly around $76, $77. And what we're really doing is just moving sideways, consolidating in that range for PayPal at the moment. Support level is going to stay put down to $67 per share. And we got a lower high sitting right over here. That's going to be a resistance from that descending triangle for PayPal. Talking about Square, and Square on the day getting a little bit of a bounce back higher, 2.9, almost 3% green on the day. Support level is going to stay put at 58, close to $59 per share. And of course, we are still trading inside this downtrending channel of lower highs and lower lows. And this right here, damn, there's a mosquito here. But this right here is going to be that downtrending channel, lower highs and lower lows. Support level, like I said, 59, resistance all the way up to $83 to $89 per share. Talking about NVIDIA, and NVIDIA here on the day was slightly lower, 12 basis points. So again, it's not as green as its other tech stocks here. Semis were the only sector which was down. So if you come over to our semis watch list, so you can see that actually most of them were green except for AMD and NVIDIA. That's kind of crazy because Micron, On Semiconductor, Texas Instruments, Qualcomm, they were all pushing higher, with AMD and NVIDIA were the only two that really just didn't quite find the momentum to push up. And probably because of how much they've already moved higher in the last few months here. I mean, Nvidia is up like triple digits, I think, on the year. And this right here is a resistance at 280 to as much as $290. So that is going to be that level to watch. And support level, like I said, at 208 down to as much as, low 200s and even in the high 100s for Nvidia. Advanced Micro Devices, we're also seeing a little bit of momentum lower, 26 basis points, just trading over $92. And this is the uptrending channel where it continues to trade within this higher high and higher low pattern. And that's going to be that higher low for Advanced Micro Devices, again, where we have previously validated that support. And right now we're getting up to that resistance at $102, $103. And that's exactly where we have previously gone rejected for Advanced Micro Devices. Next up, we got Meta Platforms. Another very strong day, getting up to our resistance of $222. So pushing up almost 3%. And Meta has had a very significant recovery. You can see that it's gone from about $85 to as much as $220. That's a 155% gain for Meta in the last few months here, and it's just absolutely incredible how much it's already pushed up. So resistance is going to stay put at 220 as much as 236. Those right there are going to be some levels to watch, and we've also got a big gap to fill between 250 to as much as $290 for Meta moving forward. Talking about Netflix here, and Netflix on the day also pushing up 4.5%, so moving up very, very nicely. Resistance is going to stay put at 366 to as much as $380 per share for Netflix. So that's going to be the target, that's going to be the resistance. Support level is going to stay put roughly at 275, 276 for this company. Talking about Google, and Google here also on the way up, 2.82%. We're coming up to a big resistance there at $108, $109. So this is going to be that level to watch as a technical resistance, all the way up to 123 for Google next, and support level is going to stay put somewhere around $100 to $101 per share. Very strong AI play, as well as Microsoft is. So Google, relatively speaking to Microsoft, is a lot more cheap, and of course the valuation is a lot lower compared to where Microsoft is trading at the moment. This is going to be Microsoft, so pushing right back up. Resistance is going to stay put at 292, so that is a level to watch. Right now we're mostly consolidating sideways, so we're not really going anywhere except for sideways. So this is the very simple support, this is a very simple resistance, and right now it looks like we are simply just trading sideways. Resistance is going to stay put at 292 for Microsoft. And last but not least, we got Shopify. Shopify flat on the day, just up close to 95 basis points. And really that resistance is going to be all the way up to $54 with a gap to fill over here for Shopify, and support level is going to stay put at $40, $41 per share for this company. So hope you guys enjoyed this video and a complete update on the markets. We had some very strong PPI numbers coming in, and as a result, the markets celebrating that and pushing higher. We didn't actually go over oil and everything else, so let's just quickly do that. So crude oil back over $82 a barrel. This is a very strong support level, and keep a close eye on this, because if crude oil goes up, that puts a lot of pressure on inflation as well. As I've already mentioned, when crude oil has been coming down, that's been one of the main reasons why energy prices have been lower, and that's put a lot of downward pressure on inflation to be a lot more aligned with the Fed's target, or not really down to the Fed's target, but coming down to the Fed's target of close to 2%. So if oil prices once again start going back up, that's not going to be great news for inflation. So keep a close eye. Volatility here coming down to now under 18, getting absolutely crushed here, down 6.6%. And we're probably about to hit the lowest level in over a year. Back in January of 22, we were trading as low as 16.4. So it's possible that we get down to that level very soon here. And the volatility continues to get crushed and the market continues to push higher. Again, when the VIX is low, it is time to go, or it is time to look out below. And Ethereum here is up over 5.3% now, and Bitcoin also pushing up 1.3%, getting up to another green day. The next resistance is going to be at 32,000 for Bitcoin. So again, hope you guys enjoyed this video, found it helpful. Tomorrow, big bank earnings coming out, as well as consumer sentiment and retail sales, two of the really important indicators also coming out for the market. Make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining us. And that 16% annual discount is still available till the end of this month. Link is going to be down below. As always, happy investing, and I'll see you all in the next video. Take care.